Hi guys, today we're gonna talk about technical analysis price patterns. It will be introduction. In technical analysis, transactions transitions between rising and falling trends are often signaled by priced patterns. By definition, a price pattern is a recognizable configuration of price movements that is identified using a series of trend lines and of curves. When a price pattern signals a change in a trend direction, it is known as a reversal pattern. At a reversal pattern, a conditional pattern occurs when the trend continues in its existing direction following a brief, because technical analysts have long used price patterns to examine current movements and forecast future market movements. Key takeaways. Patterns are the distinctive formations created by the movements of security prices on a chart and are the foundation in technical analysis. A pattern is identified by a line that connects common price points such as closing prices or highs or lows. During a specific time period, technical analysts and curvists seek to identify patterns as a way to anticipate the future direction of a security price. These patterns can be as simple as trend lines and as complex as double head and shoulders formations. Trend lines in technical analysis. Since price patterns are identified using a series of lines and or curves, it is helpful to understand trend lines and know how to draw them. Trend lines help technical analysis spot areas of support and resistance on the price chart. Trend lines and the straight lines drawn of a chart by connecting a series of descending peaks, highs, or extending through lows. A trend line that is angled or an uptrend line occurs where prices are experiencing higher highs and higher lows. The uptrend line is drawn by connecting the ascending lows. Conversely, a trend line that is angled down, called a downtrend line, occurs where prices are experiencing lower highs and lower lows. Trend lines will vary in appearance depending on what part of the price bar is used to connect the dots, while there are different schools of thought regarding which part of the price bar should be used. The body of the candle bar and not the thin wicks above and below the candle body often represents where the majority of price action has occurred and therefore may provide a more accurate point on which to draw a trend line, especially on intraday charts where outliers, data points that fall well outside the normal range, may exist. On daily charts, chartists often use closing prices rather than highs or lows to draw trend lines, since the closing prices represent the traders and investors willing to hold a position overnight or over weekend or market holiday. Trend lines with 3 or more points are generally more valid than those based on only 2 points. Uptrends occur where prices are making higher highs and higher lows. Uptrend lines connect at least 2 of the lows and show support levels below price. Downtrends occur when prices are making lower highs and lower lows. Downtrend lines connect at least 2 of the highs and indicate resistance level above the price. Consolidation or a sideways market occurs where price is oscillating between an upper and lower range between two parallel and often horizontal trend lines. Constitution patterns. A price between that denotes a temporary interruption of an existing trend is known as a continuation pattern. A continuation pattern can be thought of as a pause during a prevailing trend, a time during which the bulls catch their breath during an uptrend, or when the bears relax for a moment during a downtrend. While price patterns is forming, there is no way to tell if the trend will continue to reverse. As such, careful attention must be placed on the trend lines used to draw the price pattern, and whenever price breaks above the or below continuation zone. Technical analysts typically recommended assuming a trend will continue it is formed that it has reversed. In general, the longer the price pattern takes to develop and the larger the price movement within the pattern, the more significant the move once price breaks above or below the area of continuation. If price continues on its trend, the price pattern is known as a continuation pattern. Common continuation patterns include pennants constructed using two covering trend lines, flags drawn with two parallel trend lines, wedges constructed with two covering trend lines, where both are angled either up or down. Pennants. Pennants are drawn with two trend lines that eventually encourage a key. Characteristic of pennants in the trend lines move in two directions, that is, one will be a downtrend line and the other an uptrend line. The figure below shows as an example of a pennant. Often volume will decrease during the formation of the pennant, followed by an increase when price eventually breaks out. Flags. Flags are constructed using two parallel trend lines that can slope down or sideways horizontal. In general, a flag that has upward slope appears as a pause in a down trading market. A flag with a downward bias shows a break during up trading market. Typically, the formation of the flag is accompanied by a period of declining volume, which reverses a price breaks out of the flag formation. Wedges. Wedges are similar to pennants in that they are drawn using two converging trend lines. However, a wedge is characterized by the fact that both trend lines are moving in the same direction, either up or down. A wedge that is angled down represents a pause during uptrend. A wedge that is angled up shows temporary interruption during a falling market. As with pennants and flags, volume typically tapers off during the formation of the pattern, only to increase once price breaks above or below the wedge pattern. And triangles. Triangles are among the most chart patterns used in technical analysis. Since they occur frequently compared to other patterns, the three most common types of triangles are symmetrical triangles, extending triangles, and descending triangles. These chart patterns can last anywhere from a couple of weeks to several months. Okay, that's all. Thank you for your viewing. Goodbye. Subscribe.